Okay, I got back home and I was asked, or it was suggested rather, that the person that had the query about why his trade didn't work out quite as well as he'd hoped on this ACAD, or didn't look right. Let's put it that way. I don't think there was any major concerns, but it was a really good point. And there were lots of things about the particular chart and stuff that made it worth, in my opinion, worth talking about. So, and going into great depth. Now, I mentioned earlier, last week or 2 weeks ago, I spilled coffee on my laptop and one thing and another. So I needed a new laptop, and you know what it's like setting up laptops and tablets, getting all the stuff across. And I've only just got the video software across because it isn't a priority really, but it's on here and I'm testing it now. So this is that ACAD trade, and the comment I came back to was I didn't get in late because you always say swing 4 is after swing 3. So this this isn't the tidiest lot of swings, but that doesn't matter. And please don't take offence. You know who you are, who wrote these charts. I appreciate it, but I did say during the week, I don't want DMs. I want people to ask questions in public so that everyone benefits from the answers, which is why I'm answering in public. Um, so you've drawn these swings here, but the main thing that I wanted to point out, and I don't like writing reams and reams, it's easier to put it in a video, is that you're confusing the swings and the three CRs. You are really missing the point. This is a swing chart. What we trade is three CRs. This, like this, and this, and this. So what you're looking at here on this 5-minute chart is a 30-minute or hourly 3CR. So, and I can see the swings on this. This is an image I'm looking at, so I'll look at a chart in a moment. But that's three swings there. Swing 1, 2, 3. This will be a 3CR down. That's swing 4, and that's why you should be entering there. And that's, this point here is where the RSI goes below 0. The TMA goes below 0. That, and the other point I wanted to make is that a 3CR is a break of support. True support is higher highs being made. If we went to the line chart on here, you'd see which is why I drew a diagonal on the chart I put in my answers to you. This is an uptrend. These are all buyers that have been broken by this downtrend, high, low, lower, high, lower, low. Sellers. The sellers now are below the buyers here at this point here. Remember I said this is probably the 3CR on the 15-minute or the 30-minute, and this is where that's swing 1, 2, 3, that's 4, that's your move to the downside. Coincides with this lot going on here. It's not perfect. You could say, well, that was the bust, pullback, break and close down. That's just closed below the low of that red candle there. We can clearly see that. So the entry was here. Your stop needs to be above the 3CR high, which would have been around here. But as you can see, it just needs to be above all of the demand area there. So a stop somewhere around there would have kept you safe in that trade if you'd taken it there with that break there, and it would have gone into profit, pulled back against you, bit annoying, and then eventually continued into a load of profit. That's why I don't trade this. That I looked at it yesterday, and that's about 3 or 4 pips there, or not even that. Everything is relative. So you may be going for 4, 5, 6, 10 pips or whatever, trying to get in this swing. Why not just trade something that's faster, like GJ or gold or something? That pattern would look exactly. You couldn't tell this from whether this was ACAD, US 30, DAX, whatever. You just have to do your calculations for the larger stops, but the moves are over. You're not in the market, which is dangerous. You're not in the market longer than you need to be, and so on and so forth. So yeah, you know, these swings are fine if you're looking at an H4 3CR, but you're not. You're looking at an M30, M15 3CR. So we'll go to the charts now and have a look and see what. Here's my chart. So this is what I'm trying to say. This is the M15. That's the 3CR. There's Aaron's little thing. And another point I wanted to make, and this is handy to do that. Aaron's indicator is the best way to work out what is a valid and an invalid 3CR. Aaron did an amazing job on the 3CR, so don't get all hooked up on the technicalities, because Aaron's indicator will show you when this red candle has broken support, the low there, and then, as you can see, the sellers have overwhelmed the buyers, and they've come back and tested it, and finally price has pushed down. That's the 3CR. Aaron created the best indicator, in my opinion, on the internet, and he did it for free as well. So you make sure you thank and follow Aaron on Intrepid Noodle, because the work is priceless, in my opinion. To me, it is anyway. But there, you know, I drew support lines and supply and demand areas on these charts to try and explain, and I had labelled this one a line chart 3CR. The labels, when I switch time frames, one of the indicators on my charts deletes old labels. So if I switched time frames, I'd lose that, and that, probably the 1, 2, 3, 4. So I digress. But this, you know, that's the 3CR candle. This is according to Aaron's indicator, the 3CR candle. That's not a problem. But he built this based on the wicks. We have moved forward a bit, and that's what we do as traders. We improve all the time. And I drew this line because that's the close of that candle, the open of that candle. Those are what would be the line chart levels, close and open. I can switch to line charts to show you here now. There it is there. And that created a lower low, broke that low there. Clearly see it on the line chart. So that is resistance. That is buyers, sellers rather, being overwhelmed by the buyers. Once that closes over that level, not the wicks, that level, in my opinion, that is a valid line chart 3CR. So we don't have to wait for this higher one. It's already given us the signal. And sorry for this mess now, it was a bit of a mess there. But that was drawn on the 5-minute chart, based on that low there that created a higher high. So that means those buyers, when the price closed below them, and if it closed, there's Aaron's level again. If it closed here, it's a valid line chart 3CR because it's closed. The line charts, the open and close, are more powerful than the wicks, in my opinion. So we've covered quite a few points in this, and hopefully you know who you are. You will understand now. You're looking at all these swings. That's your 3 swings there. Swing 1 down, swing 2 is up, swing 3 is the 3CR candle, the break of support, and swing 4 is the pullback as a result of that. Not all this 1, 2, 3 is that it there. I have said this in a video in the past, and that's why I'm making this one as well. If this was just a 2 candle, 3 candle reversal, a 2CR, in other words, an engulfing or an outside bar that had closed below the previous support, then the bottom of candle 2, the bottom of the 3CR candle, is still classed as swing 3, and I've talked about that in previous videos, all on my video channel, and still someone started stealing and selling them. So that is, it doesn't matter whether it's swing 1, 2, 3, and the same goes for these line chart swings and these swings. If you have broken support here, that is swing 3. Doesn't matter what, and that is swing 3. So the pullback is swing 4. The break, any break of support or resistance, depending on which way you're trading, can be classed as swing 3 of the 3CR, because a break of resistance or a break of support will cause a pullback. There's the pullback there, that's swing 4. Because they come and test. How will they know? They used to use this ages ago. They called it fair value. And how will they know whether this price here, say that's gold at 2,000, and you think it's worth 1,800 or 1,500? How will they know whether 2,000 is fair value unless they come back and test it? So they come back and test the price. No one wants to buy it at that imaginary 2,000 level, so they just send the price down. Oops, now I've lost my little spot with the diagram there. Can I get it back? Yes. No. Oh, damn it. I'm not going to bother. So, hopefully we've covered a lot of things. There's one more point I want to make here as well, which I use quite often, and I have mentioned before, but not often enough. This. This, we cannot draw from a low across the 0 line to a bust, pullback, break and close over here, because we haven't really got much above 0. That should be a real clue that you are late. If you can draw across, so you've got, I know it's in hindsight, and it's easy for me to say in hindsight, but, and also, you've got your divergence. Sorry, I'm changing the subject. I forgot to mention this. Clear divergence there as well. That's where you want to be entering. There's your divergence. And this is double divergence. This is really, sometimes the RSI, that's why I use the TMA. Sometimes the RSI will not even show you the divergence the TMA does. And the reason I put the TMA and wanted to find the TMA is I wanted an easy way to make sure the slope, that's why it's called TMA slope, there you are, slope, it tells you the price is moving in a particular direction. The slope, and all this lot comes into that as well, all these calculations, although I don't use them. It's telling you sell only anyway, that's interesting. But if this is flat, then you're not really in a sensible trend. But I'm talking about this bit here now. But anyway, back to this bit here. If you can draw from below 0 an uptrend to above 0 and an RSI bust, pullback, break and close, the close being the important bit, then you're ready to go, good to go. If you can draw from above the 0 line after a sensible outline candles, not just this silly thing here, this is sideways. It's got to have come from high, divergence in there, all these little things. If you take your time, you will start to put together. There, you've drawn a line, or it could be there because it doesn't matter. I just chose that because it was a better gradient, if you like, and helped the diagram. That's not valid because that isn't a bust down, pull back, break, close. That's not valid to draw your white line. This is what I'm trying to explain here. Because it's not above the 20 level, and this one wasn't quite below the 20 level, but as you can see, it all worked out. These aren't exact sciences, they're just ideas to put to make you think a little every time you consider entering a trade or considering entering over here. Have I just crossed below 0 after a big old bunch of above 0? No, not here. And that's, divergent, sideways, consolidation, whatever you want to call it, whipsaw. And that's why I made this video, to add a few other things that I see on my charts. And one thing I want to clarify, I said, when you get this M15 3CR down and you need to move fast, you don't. What I should have said is you need to, just be ready, faster. And you should have had a plan anyway. You're watching this going up. If you're thinking, oh, there's a great big supply area on the left-hand side here, and when it gets up there, it's going to start to weaken off because sellers will come into the market. You've already got your uptrend line here. You're just waiting for everything to do. You know, you're above zero, big time. You shouldn't even be looking for trades here. You should be looking for the best opportunities. Same here. You know, you're below the zero line there. You've got a nice downtrend you've drawn. Oh, this was that uptrend I was talking about as well, just earlier in the image. You know, these are making higher highs. High, higher low. That's not. That's a higher low. That's a higher high. That's an uptrend. You're above buyers in a weakening. That's a higher high, just slightly above the buyers in a weakening uptrend. The moment you're below buyers, that's another point. It doesn't matter if it's a valid 3CR or not, really. That's just a guidance. The moment you have broken buyers with selling and you are below them and they're testing them, that is your signal to look for everything else that agrees. Multi-time frame 3CRs, multi-time frame RSI, multi-time frame TMA. You know, it all ties in so well together, but no aspect of it is 100% of the method I do. Anyway, sorry for the long-winded video. I am on holiday. Please do not DM me. Put your questions in the public, and then everyone gets to hopefully benefit from the answers. You know, I mean, I can see we've got tons and tons of levels we can draw on here where the buyers have been beaten by the sellers and come back and tested it. Another beautiful one here. You know, that's all you need. And then targets, clear air, whatever you want to call it. And there you go, that's it. So thanks for watching. Have a great day. Oh, excuse me.